Ladies and gentlemen, good day and welcome to Viviana Power Tech Limited Q2FY25 earnings conference call. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dipesh Patel, CFO. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us today on our half-yearly earnings call for Viviana Power Tech Limited. I am CFO, and I am pleased to be speaking with you today to discuss our financial results for the first half. Many stakeholders have questions that we have published our half-yearly results, and amount of data that is significantly higher than our turnover. So basically, we are into EPC contract, and I would like to make a short note that we are having contracts with DGVCL, JETCO, MGSL, and certain discoms, in which we have payment terms of 60% of amount, that is total billing, at the time of supply, and we received 30% balance amount and 10% amount at the time of installation. 10% will be retained as retained money with them. The same will be received as and when the contract will be completed. Okay. So first of all, I will like to inform that we have total debtors outstanding amounting to 58 crore 62 lakh 35,000 as on 30th September 2024, and by the till 4th November we have already received a total amount of 30 crore 3 lakh rupees, which is more than 50% of our total outstanding amount as on 30th September 2024. The balance amount, that is 20 crore, we are expecting to receive in the month of November and December, which will be released by the discom at the time of installation of the material. Major data we are having on the balance sheet date is towards supply of material only. Okay. So and major data of the company is government, that is DGVCL and JETCO, which has a total amount of 49 crore out of 58 crore rupees. The second question was asked by another stakeholder, that do we need to provide any bad debt provision or provision for any long-term outstanding? So as of now, there is no uncertainty that we will not receive any amount, or that will be become bad debt for as of now. We are exercising such amount, huge amount, for recovery of balance amount, which is outstanding for more than 6 months, and there are no such amount which is outstanding for more than 2 years or 3 years. Major amount outstanding for 1 to 2 years is towards only for retention money, that is 10% of our basic amount, which is there in the contract. So if you see that by the end of December 24, we will receive almost 80 to 83% rupees of our total amount, and already we have received 51.25 rupees percentage amount until 4th November 2024. Ma'am, we are now open for any question answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, We will wait for a moment while the question queue assembles. The first question is from the line of Aman Soni from Invest Analysis Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, sir.
Hi, sir. My question is, what is the company EBITDA margin guidance for near term and over the next 3 years? Additionally, are there any specific initiative or operational improvement planned to drive margin expansion in the line with your revenue growth target?
Yeah, good afternoon. This is Rishi Choksi, Director of Viviana Power Tech Limited. In terms of EBITDA, we are in past we had the debt from the NBFCs at the percentage of around 15 to 60%, and at present we have very good banking facility at the interest rate of 9.5%. So one is interest which company is bearing would be decreased in terms of EBITDA will able to improve, plus the quantum of work, the scalability which we are going through, we are increasing our revenue drastically, and we'll be having the investor presentation also by end of this week. So we will able to find the scalability also. So it will reduce our overhead, which was around 7 to 8% before 2 years. It will get reduced to around 3 to 4%. So by having scalability also, the overhead will get reduced. So plus the potential in the market, the projects which we are bagging at present and bidding, we are having more margins compared to past. So 3 points are there in which we will able to increase the EBITDA.
Sir, can you please provide me in percentage term the EBITDA margin for next 2 years?
Surely the not EBITDA but PAT would be at least in 2 digits.
Okay, sir. And my next question is, as the company has raising 19.16 crore for the equity share and increase its borrowing, could you provide insight in the specific plans and strategic initiatives this fund will support?
This fund has been raised only for working as a working capital. So we are bidding big projects, and for that only we have raised it. No such any second planning or anything else. So it's purely for working capital only.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rajesh from VTG Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir.
Yeah, hi. So thank you for a great set of numbers. So a couple of questions would be one would be like any guidance on the revenue outlook for this year as well as the PAT margin outlook for this year, and what are our current order book as of now, and any pipeline which you can highlight, like amount of projects which you have already bid for and which we might see, or your success rate in that particular pipeline.
Yes, good afternoon, sir. Current order book, along with the balance work which was there on 31st March 2024 and new projects which we already got the LOS plus in execution, plus we are L1 in many of the discoms for a few of the projects. So total amount is more than 236 crores. That is the amount, plus the order which we have bid at the tenders is more than 450 crores. So we are awaiting the evaluation of those tenders. It's more than 450 crores. And the PAT which we are expecting would be around 10 to 11%. And the top line which we have committed in our past previous investor presentation was around 125 crores, but we will go we will execute far better than that which we have committed, and we would be announcing it in our next investor presentation, which will be there within a couple of days.
Sure. So thank you, Ritu. And one more question regarding the working capital requirement, and I believe that now you have better credential from the banks also. The working capital limit might have also increased. So anything which you can highlight with respect to the finance which is available with us to execute projects in the coming years, or would you require further funding, say, in a couple of years' time? Anything which you can highlight on that front?
Before 2 years, we had the banking facility of around 17.5 crores, and at present, we have with the same bank, we have the facility of 67 crores, and we have tie-up with another bank also. So it would be a multi-banking facility, and accumulating facility would be around 76 crores from these months. So we have ample facility in terms of CC as well as bank guarantee and LC.
Right. And I believe your transformer facility has also been inaugurated. I think there was inauguration scheduled on 29th of October. I hope that went really well. And anything which you can tell us about the plan with the transformer? I believe right now we would be producing small transformer which will be targeted for the renewable sector like solar and wind. And any plan to go for the larger transformer going forward? And any revenue potential which you can share from the
thing will be mentioned in investor presentation, but I will highlight that we had the inauguration on 29th of October, as we mentioned on the MSC. And at present, we have the manufacturing capacity till 1,250 kVA distribution transformers, mainly for DISCOMs like DGVCL, MGVCL, and PGVCL. And the type test have been completed till 500 kVA for 25, 100, 63, 200 and 500 kVA. So we are going to bid for the open tender which is there through DGVCL. And we, as a backward integration, we do have existing order of Viviana only for arch transformers of 2 crores. So we'll be using our own transformers in this December and January for our existing projects also.
Right. And what kind of revenue potential does it hold, the facility? What kind of annual revenue? Let's say this facility operates at full utilization. So what would be the revenue?
Next 2 years, it will be 10 to 15 crores in the transformer. And once we get empaneled as a regular bidder, for 2 years, we would be a new bidder. And once we get empaneled as a regular bidder, we would be having the revenue of more than 50 crores through DISCOMs itself.
Right. And any plan to enter the larger size of transformer, like maybe export market or?
So for next 6 months, we are targeting utilities, and then after we will get our transformers type tested in as per IEEE standards to export in Europe and USA market.
Okay. Great. Thank you. So I will go back into the queue. Thank you.
Thank you.
Thanks.
The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Am I audible?
Yes, sir.
Thank you very much for the opportunity. Good afternoon, everyone. Sir, I have a question on the P&L. If I look at the cost of material and the other expenses and the operating expenses, as a percentage of sales, there is massive variation comparing to the previous half yearly numbers. So is there an element of reclassification there? Because cost of material has jumped quite substantially from, we used to be around 50%. We did 51% last year. From there, we have jumped to 75%. And the operating expenses from 23% of revenue, they have actually crashed to 2.3%. So I'm wondering if there has to be some reclassification. So can you confirm that?
Earlier, we did not have that much credential to grab or bid major projects, big projects. So we were executing the projects in which the clients were giving us the material as a free issue. And we were executing the erection and installation work. And at present, we got technical as well as financial credentials. So we are getting bigger size of projects which are having 100% turnkey modification. So we
Okay.
need to supply all the materials. So in future also, the material portion would be around 75 to 80% in all the projects.
Okay. So H1 should be our base to look at all the cost structures, right? Because this is the model which will sustain going forward
Yes.
in terms of material handling.
Yeah, in terms of material. And we would be having the major revenue in Q4 itself. So 50
Yes,
to
sir. So that I
60% of the
understand. Right.
50 to 60% of the total revenue of the company will be coming in February and March.
Understood, sir. So you also mentioned that the new projects that you're bidding for and whatever you are executing as of now carries higher margins. So I was expecting the margins to peak out at around 18.5% for the company for an entire year. I'm not looking at quarters or year. I'm looking at on a yearly basis. So is 18.5% a reasonable expectation, sir? Because in H1 we have done 15%, but I understand 15.8%, but I understand this is like it's a very weak half, and substantial revenues will come in H2. So for the entire year, can we do like 18%, 18.5%?
The PAT would be, after all, the PAT would be around 10 to 11, 12%.
You're saying PAT margin, sir?
Yeah, PAT.
10 to 11%. Okay. Okay. Sir, for the upcoming years, sir, how do you see the tenders? How are the tenders looking like? The tenders which are in the pipeline? Do we see the kind of growth that we were expecting during the AGM, and there was an EGM before that where we had interacted? So whatever our expectation of growth from the government side, is that panning out, sir?
Yeah, from last 1 year, we are looking at the market of this power distribution majorly, because we started with the transmission only.
Right.
The fund fueled by the central government and even from state discoms also, it's considerably that much high that we don't have that much manufacturing facility and installers in entire country. So to get the potential and business opportunities, it's tremendous high compared to even our expectations.
So more than what even you were expecting, sir?
Yeah, it's much
Okay,
more
excellent.
than which we are expecting. The tenders which are coming, the fund which are coming to the discoms, it's much approximately 50 to 60 times which they were getting throughout the year. So the fund is there, the potential is there, the requirement is also there.
Understood, sir. Sir, for the entire year, for this year, next year, and the year after that, can I assume that our total net working capital would be around 5 to 6 months for an entire year?
Pardon, sir?
Suppose, just hypothetically, sir, suppose you do 100 crores of revenue. I know you'll do much more than that. I'm just taking for calculation purposes. Let's say you do 100 crores of revenue. So your net working capital at the end of the year, including your retention money, all of that put together would amount to around 40 to 45 crores? Or would you require more than that, or? G.
It will be around 35% we require.
35%, sir? Is that the number we should take?
Yeah, 35%.
And that includes the retention money, sir?
Yeah, it includes retention.
Excellent, sir. Excellent. Okay. So final question. We raised some capital for working capital, but the way you are growing and the way you are saying that even what you were expecting, the orders seem to be more than, like, whatever is in the pipeline seems to be much more than what you were expecting. So would you require some further dilution? Any further equity raises down the line?
For next 5 to 6 months, we have not decided or discussed anything so far.
Nothing for this financial year?
We have that very good bank facility, and up to 3 to 350 crores. The fund is sufficient, cash reserve is sufficient, the LP bank guarantee limit is also sufficient.
So 350 crores, what are you referring to? You're referring to the revenues?
Yeah, revenues.
350 crores के लिए you have enough debt and equity in place.
Yeah.
Okay, perfect, perfect. Great, sir. Thank you very much for answering my question, sir. Thank you. All the best.
Thank you.
Thank
Thanks a
you.
lot.
The next question is from the line of Gagandeep from Invest Analysis Advisory LLP. Please go ahead.
Hi, good afternoon, sir. My question is, could you tell me the current capacity utilization of the facility?
Sir, would you please repeat, sir? I'm not audible actually.
Sir, could you tell the current capacity utilization of the facility?
Current capacity.
Current capacity of transformers?
Yes, sir.
For transformers, we have the current manufacturing capacity at the rating of 1250 kVA, and annually capacity is around 7,000 transformers a year.
Okay, sir. Thanks, sir.
Thank you. The next question is from the line of Kan Garg from Garg Advisory. Please go ahead.
Yeah, hi, sir. Am I audible?
Yes, sir.
Sir, I have two questions. The first question is, amongst our order book, what is the split between private and public order book?
Yeah, earlier it was 90-10, 90 with private and 10 with government. But the way we are getting payment drastically in very speedy manner through government, so it's reversible. It's 90% government orders and 10% private.
Sir, given that there is a lot of spend that is happening on the transmission side, and I think a lot of private parties, they have won the tenders and we were subcontractors to them, shouldn't we also be getting the private tenders also? Or is there a margin difference, that's why we are not trying to get them?
Particularly in transmission line, because we have the core competency and we injected this business through transmission lines. The term right of way is more crucial in execution of any transmission network, and it's getting challenging and difficult day by day. So at present, whichever order we are having, it's without right of way. So it's purely safe and secure orders that we can close the contract in stipulated time frame. So that is the only reason we are not bidding or we are not going into transmission line sector.
Okay. Sir, related to this question is that, companies in the transmission segment, the larger companies, EPC transmission, they just make 10 to 12% EBITDA. I think we are saying that we will make 10 to 12% PAT, and then I think that would translate to 17 or 18% EBITDA level. I mean, what causes such large difference in the margin profile?
Particularly in transmission lines, the overhead would get drastically increased because we have executed the projects up to 400 kV lines, and we had the learnings so that the 6 months project gets delayed till 3 years, 4 years, 5 years. So proportionately the margin will get reduced, even it may get in negative also.
Well, I mean, my next question was related to the value chain, transmission value chain entire. Can you just explain to me in what part of the value chain that we operated? I understand you just explained that you are not now into transmission, right? So there is substation part, there is erection of towers, there is transmission. Like, where do we operate, and do we want to enter into newer value chains in the transmission segment?
So at present also we are executing the transmission line projects for JETCO. One line is for 132 kV and second one is for Surat Diamond Boost, which also for JETCO 66 kV line. So there the right of way portion is in the client scope. So those kind of projects at present we are executing. Even for substations also we have bidded 2 projects in Gujarat and Kashmir. So we are there only. We do have our own setup for particularly transmission lines and substations. But we are not going to execute any project comprising of right of way in our scope.
Okay. So we are executing transmission lines only, but it's just that the nature of contract, our bidding depends upon the nature of the contract.
Yeah.
Right? And let's say for the substation part, I understand that ABB and all these players, T&D, we're also into substation. Just for my clarity, we procure entire system from it and then we install it, right? That's our
Right.
scope of work, correct?
So far we have executed 3 substations up to 220 kV by 33 kV for Wari renewables, and in that except transformer, everything was there in our scope, including design engineering also. And what as per our learning, we are going to complete 10 years next month. So the energy, the manpower which we need to deploy to execute any 10 to 15 crores of substation or transmission line projects, we can execute with the same manpower, same machinery, with the same talent, more than 100 crores of distribution project.
Oh, that's wonderful. I think my last question would have been related to this only. With the current setup that we have, how much revenues can we generate? Like what could be our peak revenue? I think that would be my last question.
The peak revenue in terms of?
So let's say for EPC capacity also, right? So there is a management setup that we have in place. So with the current cost structure, current management structure, what is the EPC revenue to be
current management structure plus the finance we have through preferential allotment as well as the bank facility, it's 350 to 400 crores. We can easily manage with the same structure.
Oh, that's a lot. Okay, sir. Thank you. Wish you all the best.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Rajesh from VTG Capital. Please go ahead.
Yeah, hi. Thank you for taking my question again. So can you please comment a bit about the DESCOM financial health? Because in the past we have seen many issues with DESCOM, but I believe the way things are progressing, like their financials might have improved substantially. So can you comment a bit in general, like what is happening with the DESCOM specifically, maybe with Gujarat or any other states where you have experience in?
Yeah, I'm taking the example of one of the DISCOMs of Gujarat, like DGVCL, Dakshin Gujarat. So they were having before 2 to 3 years, they were having the budget of around 200 to 300 crores for entire year. And at present, they are having more than 10,000 crores to utilize for the expenditure and network establishment as well as improvement. So this is the major difference, the fund they are having at present, and they are cash rich as such because we got the payment within 24 hours without skipping any process of payment. So that is the beauty of DISCOMs which we witnessed.
Okay, great. Thank you very much. Thank you. And maybe a bit more on the plans, so like where do you see the transformer business in the next 2 to 3 years? And are you also exploring, given the strong demand environment we have seen or are seeing in the transformer market segment, are you planning to lease any facility which might be available in Gujarat or any other place, any other city of the country?
Yeah, we are eagerly exploring the opportunities and any plants or factories which are available for sale or maybe for tie-up or collaboration. So we are in process to execute such deals. So we will share soon if the deal gets closed.
Sure. Thank you. Thank you. Thank you very much. Best of luck. Thank you.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Deepak, who is an individual investor. Please go ahead.
Yeah, hello sir, am I audible?
Yes, sir.
Yes, sir.
Yeah, congratulations on a good set of results, sir. Basically, I wanted to understand some color on the order book. You said 236 crores is the current outstanding order book, right? Correct?
Yes.
Yeah, I wanted to understand the execution timeline for the entirety of the order book, sir. Is it going to be 1 year, 2 years, more than 2 years?
Yeah, 236 is the cumulative amount on which the order book we had, balance order book we had on 31st March of 2024 plus existing orders as well as the orders in pipeline in which we were L1 and we are expecting the orders within this 10 to 15 days, couple of days. So cumulatively, it's 236 crores of orders. Among this amount, we need to conclude and execute for more than 150 to 170 crores by this 31st of March.
Okay, so you basically mean that out of these 236, 150 plus crores have to be done by 31st of March 2025.
Yeah.
And this is inclusive of the revenue we've generated in H1, or this is over and above H1?
That is inclusive of revenue.
Inclusive of revenue. Got it, sir. And rest of the order book will be done in FY26, and plus more orders will come, or rest of the order
will be in H1 20 next year of H1 only.
Next year of H1 only. Great, sir. So second question I want to ask is.
Yes.
Yeah, go ahead, sir.
So majority of the orders which we are having and we are going to get by couple of days would be of 9 months and 12 months. So it would get executed latest by H1 of next year.
Got it. My second question was, sir, are we expanding geographically as well? Is this order book concentrated in Gujarat only, or we are kind of getting more orders outside Gujarat as well? Or let's say we have plans to expand geographically as well?
So starting from 2014, we got empaneled in Gujarat Transcom, and then we had the footfall in other 8 states of the country, starting from Kashmir to Haryana, Rajasthan, MP, Chhattisgarh, Telangana, Kerala. And then suddenly all the discoms and transcoms are having flow of the work. So we concentrated on Gujarat from last 2 years. But at present also we are bidding in another states. So hopefully we will be getting orders from other states also.
Got it. Congratulations, sir. I'm done with the questions, sir.
Thank you, sir.
Thank you. The next question is from the line of Hemant, who is an individual investor. Please go ahead.
Yeah, good afternoon, sir. I'm audible?
Yes.
Yes.
Okay, so what are our plans regarding grid upgradation and smart meters and BESS? Are we going to foray into it?
So in grid upgradation, we are already executing for the discoms as well as we are bidding for the transcoms also. And we are not in smart metering because for smart meters, execution is little bit challenging compared to what we are executing, the kind of projects which we are executing at present.
Okay. And what about BESS, battery energy storage system?
So we have not explored yet because we are more focusing on this EPC and transformer business at present.
Okay, and you said that you have bidded for 450 odd crores, right?
Yes.
So what's the success rate in that?
So success rate is around 10 to 15% so far from last 4 to 5 years.
Okay. Okay, that's it from my side.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Deepak, who is an individual investor. Please go ahead.
Yeah, thanks for giving the opportunity again, sir. Sir, actually, because this is the first time we are having this conference call, just wanted to ask, is management planning to have regular conference calls on a half-yearly basis, or this was an exception?
Yes, surely we would be having it maybe half-yearly or quarterly basis if possible. And we will be having the results also on quarterly basis. Voluntarily, we will be announcing the quarterly results because we have completed 2 years as an SME. So to upgrade and migrate on main board, we will be having the habit of posting quarterly results also.
Great, sir. Good to know. And my last question, sir, any color on what we can expect from, let's say, our order wins from, let's say, here onwards, the pipeline, and what is our win rate currently? are we limiting down by, let's say, the opportunity, or, I mean, there are a lot of tailwinds, and, I mean, FY26 can be boosted on top of FY25?
So, as I mentioned, 450 crores is the bids which we are at present into, and we do have the order booking of 276, and we have ample capacity of EMD which we need to pay at the time of bidding. So the limit is not there in terms of finance as well as the manpower strength. So wherever the opportunity is there and good project is there where we can execute in a speedy manner, we are bidding those projects.
Got it. So, sir, did I hear it right? 450 crores is the bidding pipeline, and what is the win rate currently, I mean, based on past trends?
Yeah, 10 to 15% the win rate goes.
Got it. Cool, sir. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Rishi Choksey for closing comments.
Ma'am, we do have the participants in queue for the question answers.
The next follow-up question is from the line of Garg from Garg Advisors. Please go ahead.
Thank you for the follow-up question. I just wanted to understand, I think you just made a comment that the win rate is 15%. But let's say if we have 450 crores of orders in pipeline, so that would mean that we are expecting 60 to 65 crore type of wins in next 3 months, 3 to 4 months?
Yeah, certainly.
Okay. And sir, what is the typical order size, I mean, that we target for? Is it 10 crores, 15 crores, 50 crores? So what is the number that we look for?
At present, the credentials which we are having, financial as well as technical, it would be around 30 to 50 crores. Single order size would be.
Acha. And those 30 to 50 crores, this is also kind of an optimal number, right? So I'm assuming that we must be not taking any orders which are less than 10 crores, let's say less than 5 crores.
Yeah, certainly. Around 10 to 12 crores, we are not bidding any small orders. Except it's an extension of existing order. We are not bidding single bid less than 10 crores.
Okay. And sir, I think we had a very good relationship with Adani Group. I saw we have in the previous presentation that we had executed few orders, and the Adani Group itself, they have won few transmission lines. So is it fair to assume that we can expect few orders from them also in future?
So in Adani, we have executed major projects of transmission lines, and that too power evacuation network establishment for the renewable projects. At present also, we have successfully completed 3 of transmission lines of 400 kV in Khavda, world's largest RE park for Adani Grid. And they are more focusing on that particular terrain only. So we are in process of bidding for Adani Power, Adani Green and Transmission, small projects they are having for electrical utility shifting as well as transmission lines, small transmission lines, but not leak just because of we can't afford to have less pad, which we are getting at present in our existing projects. So that's why that is the major reason we are not getting any project from Adani from last 6 to 8 months.
Okay, so I think recently Adani Transmission won some 15,000 or 20,000 crore worth of projects. So we may not get any of them again because of the constraints that it's
ROW prone area, and it would be difficult to execute the projects within a stipulated time frame. As Adani is involved, the project will get executed, that is for sure. But the time which transmission line projects take is considerably higher than the distribution projects. So there we need to pay the overhead plus the amount which we might not have considered at the time of bidding. So our PAT and all the margins may get affected.
Okay. Thank you, sir. Understood. Thank you. Thanks again for letting me ask the question.
Thank you. The next question is from the line of Deepshri Soble from Shrinika Securities Private Limited. Please go ahead.
Thanks for opportunity. My question is about what is the a risk factor in maintaining the order book. So do you see at present any risk with maintaining this order book?
Pardon, may I get the question again?
Yeah. Do you see any risk in maintaining the order book? So do you see any competition or risk in maintaining this order book?
Yeah, competition is everywhere, but the amount of tenders, the bids are there. At present, we are in the safest zone in past 10 years, which we have witnessed. So the fund is coming from all the discom transcoms plus the bids, the tenders which are coming. Even we have not seen such scenario in past.
Okay. Thank you, sir. Can you upload this transcript of this con call?
Yes, it will be uploaded.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Deepak, who is an individual investor. Please go ahead.
Yeah, hello. Thanks again, sir, for the follow-up question. Sir, as you had given a guidance in the last presentation about your revenues and order books for, let's say, till FY27, the investor presentation that you're going to upload, can we expect a similar projections till, let's say, FY27 and 28, or how is going to be this time?
Yeah, we will surely excel, and we are going to have the investor presentation within couple of days once we get the LOS which we are expecting from the clients, and the same kind of announcement would be there, and it would be much better than what we have already announced last time.
Got it, sir. And we can expect a similar projection till, let's say, FY27 or maybe till FY28 as well.
Yes.
Got it. And sir, second, what is the confidence level when we'll just raise the projection? So do we kind of have solid contracts which are locked in, which have an execution timeline, which kind of gives us a projection and a confidence? How confident the management is when we just kind of project something like this? Is it backed by contracts? Is it backed by the pipeline? What are the levers there?
So for next financial year, we are damn confident, which we have bidded and we are going to bid the open tenders. It will get sorted, which we have announced, and after that, we are exploring to tie up with big players, and we are in process to do that. So we will be having back-to-back orders from bigger players also. So just to secure the business, partly would be having those such kind of orders also.
Got it. Thank you so much, sir. I'll be waiting for the presentation then.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask the question. As there are no further questions, I would now like to hand the conference over to Mr. Rishi Choksey for closing comments.
Thank you so much, all the participants, and let's conclude today's call. I want to reiterate our confidence in the strength of our business and the strategies and initiatives we have in place to drive sustainable growth. If you have any further questions, please don't hesitate to reach out to our investor relations team, and we appreciate your time today. We look forward to speaking with you soon again. Thank you so much.
On behalf of Viviana Power Tech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.